From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Well, hello. This is the COB, all the stuff you need to know about the day in business and markets on the 29th of March. I'm Nadine Blaney.
I'm Kyle Rodder. It's great to have your company. And, thanks to a softer CPI figure, it seems that we finished higher again today, at least when I last checked.
No, we are slightly higher still. So
Good.
don't doubt yourself, Kyle.
No,
Just up by about 1/4%, 7,051 right now. We're even seeing a little bit of life in the emerging companies index, but I like putting that out there. It has been a day, though, really, that has been dictated by this local inflation read. So it's one of our key three themes. We've got inflation, we've got the ASX looking to continue its push higher as we get the final match out coming through for the S&P ASX 200. And I think it's worthwhile mentioning commodities because we've got energy going really strong today again. We've got the miners going really strong today again. And so, when you have that coming together, even a bit of a bummer from UBS on the banks wasn't enough to derail, I guess, the sentiment out there. But what do you think, Kyle? Do we have an RBA pausing next month?
Well, they've got all the justification that they need now. Soft retail sales figures, not terrible, but softening. We've also got that sort of jobs data, which is suggesting maybe employment is slowing down. Employment growth is slowing down. Tight labour market still, but employment growth slowing down. And I suppose this number gives them all the evidence that they need to, sell, I guess, that notion that they can pause for a little while and sit things out and wait for the data to come through. So the markets were already there. It'll be interesting to see the commentary from economists now, because that was still fairly split in the last few weeks.
Well, I do know that Capital Economics says we're now in for a pause. I know that Citi has pulled back and I guess dumped, if you want to use those words. It's call for an interest rate hike coming through. So yeah, I've been keeping a pretty close eye on my email box to see any sort of reanalysis, rejigging that's coming through from some of these forecasts in the wake of that inflation read. So there's a difference between what you think that they will do and what you think that they should do, right? I mean, do you think that it would be wise for the RBA to sit back, wait, take the lay of the land, see what all the lagging impacts of monetary policy will be on the economy?
I'm a simple man and you know that, but I've always thought that if there is a 6 in front of the headline inflation figure, that probably justifies a little further tightening. But of course, the sales job has been done over the last couple of weeks from the RBA. We had Christopher Kent, we've spoken about it a few times, coming out and talking about the long and variable lags of monetary policy at the best of times. But we've also got high savings buffers and along with that, this mortgage cliff that we're still talking about. So there's a lot of water to go under the bridge. There's a lot of work that rate hikes can still do on the economy. So I suppose you couldn't fault them necessarily for sitting things out for at least a month.
It's funny because when people speak to me, they always say, well, Bank of Canada, like I've got some insight into the Bank of Canada. But yes, the Bank of Canada did pause to see how these interest rate hikes are taking hold. But I will say there's more evidence of a slowing in the economy in Canada than there is so far here in Australia. But of course, you never know what's coming. All right. Let's get to some of these sectors. It's in keeping with some of our key themes. We saw the miners doing really well today, BHP, Rio Tinto, Fortescue, look at that. So we're watching iron ore prices continuing to remain very strong.
Energy as well was, one sector that sold down quite considerably around these issues in global banking. But since that has been all but resolved, we'll say, at least for now, a bit of a bounce back in underlying energy commodity prices, and that's flowing through to some of our majors. We've got Woodside Energy pushing back towards $34 per share, up 3% today.
So here's the details on that UBS read on the banks today. So it says that recent events in the banking sector across Europe and the US really is just lowering market confidence in the portfolio. It says that they will continue to experience higher funding costs, rising bad debts, tightening banking regulations, all of that's negative. So it slashed its FY24 and 25 earnings per share estimates by around 6.8%. Price targets down close to 20%. Basically, it also says that there's going to still be increased competition in the banking space, that they will really begin to compete more aggressively for some of those higher deposits. So look, maybe a bit of a plus for some consumers, but it's weight on the banking space. We'll be speaking with our feature guest about the banks a little bit later on. But Kyle, we should mention Reliance Worldwide it was one of the best performers today.
Yeah, it certainly
And
was.
I learned why from our colleague Daniela Quillet. It had an investor day, released a few new products. I thought I wouldn't dump you in that one. Yes, Reliance Worldwide.
Yeah.
IntelliHR was also, I just find this is interesting because it's more M&A news. It hit a 17th month high. It decided to back the Access Group's buyout offer, so it gave the flick to Human Force Holdings, says that it was just inferior to that proposal.
Yeah, absolutely. I suppose this is what happens in slowing market environments. You do get a bit of consolidation, so M&A activity there. ALS rises on completion of divestment with SRG Global as well. $80 million there, upgraded its FY23 underlying net profit after tax. Its forecast range is now between 312 and 322 million. It was previously guiding between 300 and 320.
So I love silver linings, but I don't want to paint it as it was all good news. Megaport, that got absolutely hammered today. So there's obviously been a lot of management changes. Vincent English, longtime CEO, resigned. But then we had yesterday an announcement that it had replaced the CEO and the CFO, but some of its major shareholders, JP Morgan Chase and Firetrail Investments, we speak with them regularly. They've been cutting their stake in Megaport, so that's got people a little bit scared. We were talking about M&A. Yeah. Still can't get past M&A in the lithium space. Makes me think of Pilbara today. So RBC Capital Markets initiated coverage on Pilbara, did really well. It also got an extension for Pilangura. But good old Liontown was the stock of the day on the call today. Let's listen into what Koshi's guests had to say.
What we're saying now is hold. We're still a hold here. The candles are still fine. There's nothing in there to say that, if you want to take a little bit of profit off the table, you could, to pay back some of your original investment and then see how you go on the rest. But no, I still think it's worth a hold based upon what I'm seeing in the charts. I think Albemarle is a logical acquirer of Kathleen Valley, which is obviously Liontown's main mine of lithium. It's just south of Perth here, so they'll be looking to plug Kathleen Valley, which is just north of Kalgoorlie off the top of my head, into the production chain, which ends with processing down in Kwinana. And it's the processing, I think, which is the key to the whole picture.
In the short term, and we've seen these big volatile cycles with the lithium really over the last 5 years. I don't think the short-term supply and demand dynamics of the lithium market have really changed that much. We're not going to get too carried away just because a random takeover offer's been lobbed.
Okay, well, let's get a bit of a chat about the day that was. Mark Gardner from Macquarie Capital joins us now. Mark, great to see you there. Really want to talk straight away with the banks. I know there's a couple of stocks that you've got your eye on at the moment in terms of the financial sector. Before we do, I guess just the note that we got from UBS today, I'm not sure if you read it, but the essence of it is that the bank instability we've seen across the globe, it's not necessarily going to affect too much what we're seeing here as far as bank stability, but it's a hit to confidence. It shows that maybe credit demand and credit growth is going to be weaker going forward. I mean, does this sort of feed into your general view of the financial sector at the moment, especially at this stage in the cycle?
Absolutely, yeah. Look, I've been, I think a lot of the analysts, if you go back, downgrades happened quite a few months ago, even leading into the earnings reports. So before CBA released its report back in February, the consensus price target was in the low 90s then. So then it came out obviously worse, and obviously we were trading at about $109, $110 then. So I think, if you go back, and I've gone back and back tested, and those big four banks really only do well when credit's expanding. We know that credit's not going to be expanding. So I don't think UBS is necessarily bringing anything, radical to the table here. In fact, I think they're probably pretty late to the party, their analysts, to be honest. And you've seen pretty heavy sell-offs overall in the last month. I think the mortgage banks, the big four, are probably going to have a little bit more pain to come. I think they would have been breathing a sigh of relief today with that CPI number. So I think that does give the RBA not a reason to pause, but space to pause and see how things play out. So that heightens our chances of softening some any sort of landing for the economy. So I think that's a pretty good thing. But there's obviously I sent through to you guys there's two banks in particular, Macquarie and Judo, that have been hit I think Macquarie is about 12% in the last month, and then we've got obviously Judo's been hit 21 or 22%. Both of those, Macquarie's already flagged in their quarterly update that they're going to have, it's likely they'll have another record profit. And Judo as well, actually, quadrupled their profit. They're only small; they've only been around since late 2021. But as you can see there, the Tier 1 capital ratios are actually considerably better than the rest of the banking sector, the big four there. And they've been hit the hardest, realistically. Judo's NIM's higher, small and medium enterprise, but their non-performing loans are actually the lowest in the market. So at this stage, Macquarie's about mid-pack. And I would think that, they've got very good stats there. However, because I guess they're the new kid on the block, they've been hit the hardest. But when in fact, if you dig down into the numbers, they're actually far better capitalised realistically than the bigger four. They've got a banking licence, so they have access to the RBA, the same as the rest of them. So
what are you saying? You're buying Macquarie and Judo?
Yeah, I am. Yeah. So
that's what people want to know. What you're buying?
Yeah, no, we've been buying these over the last couple of days. Judo not in massive size. It's obviously only a bill market cap compared to the rest of them. But Macquarie makes a core position. We're adding to that as well. And we'll probably just wait and see with the big four for now. Whilst this mortgage cliff is still going on, and while we're still hiking rates, etc., we'll probably just wait and see. Because I think there could be some more bumps in the road for those guys.
Sorry, Mark, the banks don't seem that exciting. Is that just a sign of the times?
Yeah, I think so. They're not. Obviously you've got massive moves in lithium yesterday.
Yeah.
It's much more exciting. But which I think just brought things back to sort of at least fair value. Those guys were getting 3 of the top 6 shorted stocks on the exchange were lithium stocks. So there's obviously some sort of play going on there. But yeah, look, I think obviously banks have been in the news, but we've got to look through the fact that we've got very high capitalised banks, very high Tier 1 capital ratios, and big sell-offs like 12% for Macquarie, who will be reporting soon, and Judo obviously 21% after an outstanding result. We saw it go up to $1.60, has since dropped nearly 50 cents. So so decent buying opportunities for now. You probably wouldn't go, you're not going all in just yet, just in case something else comes along over the next few weeks. But overall, I think those two, Credit Suisse and SVB, was a lot of it's to do with poor management.
They might end up being the poster children. We don't know if this latest banking crisis.
Pretty
short.
Crisis is probably not.
I've been asking about that. Are we calling it a crisis? Are we calling it an incident, a situation?
I think incident's probably a better word for it. It probably doesn't make as nice a hashtag though for Twitter.
Or a headline.
Exactly.
Yeah, no, my SEO articles didn't do well with little incidents in there. I had to call it crisis. But I just wanted to ask one question, because I always feel in these situations, like especially as a younger investor as well, you try and find these kind of heuristics or ways to make decisions of investing.
Sorry to interrupt. I feel like he just called us both old, but anyways, continue on.
I didn't say that, but I'm still early in my investment journey. But you sort of think about the next time we're in this sort of stage in the cycle, which might be sort of 3 or 4 years from now. But the term structure of interest rates, everyone was sort of saying, okay, interest rates are going up, so the bank profits must benefit from this. But we saw short-term rates much higher than long-term rates. We know that the way that the banks make their profits. Do we have to keep that in mind the next time we get into that position, that that's not a good environment for the banks?
I think you have to be wary of common truths from analysts. Yeah. And there is, yes, it does improve the net interest margin, but not while the yield curve's inverted. Yeah. So, you get, and I know that's probably, for someone starting their journey investing, that's probably a little bit complicated, but it's one of those common truths that gets, it just gets repeated and repeated and repeated. And if you actually look into it, the same, like I said, I've been avoiding Judo, for instance, until I spent quite a bit of time looking into it and realising how actually capitalised it is. And Macquarie, I was quite surprised by those numbers. And so yeah, there's little lessons you'll pick up along the way that, where those common truths will lead you astray. The best advice I can give is probably, have a look into it yourself. Don't just trust, analysts get it wrong too. But it's your money. So at the end of the day, you're still responsible to fact check a little bit.
So Mark, would you be putting your money into, new money I should say, into iron ore? It appears to be going quite well. We've got Dalian iron ore continuing to climb. Chinese demand really the backdrop to that, even though we've got still talk about recession and US recession and how that would impact.
I'd be scaling in. I'd probably be preferring mineral resources at the moment. I would like to wait and see the fallout of these higher interest rates. The Chinese recovery's been massively slower. I mean, we're talking about this for 6 months now, and the figures really haven't stacked up to there being any sort of major recovery. So look, I'm a little bit wait and see still, and I think prices are reflecting that. I mean, about October last year, we had BHP down at $37, so we're still significantly higher than that. And we will have the US come into recession at some stage. So yeah, I wouldn't be fully allocated, but I would certainly be nibbling at the moment. I'd be scaling in maybe a quarter of what you want to buy in total. And then obviously, as you see the figures come out and if the conditions improve or we get a soft landing, obviously you're speeding up that process to get back in.
Just wanted very quickly, just a question on that iron ore play, just because prices are so much lower than they were from when they were at their record highs. I mean, is this just a very big bet when it comes to BHP on an uncertain outlook for China, and in particular what its policymakers do with its growth story? Because it's, we're 50% off that $220 highs, but BHP share price isn't that far away from its record high.
That's why I'm cautious, because I think if iron ore price is the tentpole for all of these big miners at the moment, and if it fails, there is some serious downside. However, if it continues to rally, or if it just grinds higher, I think those prices will hang in there. So until I see a clearer picture, I'm not really willing to commit, to full allocation. So we would normally have, 10 to 12% in BHP, for instance, is one of our, core holdings. We've sort of sold out recently. We really only back into small amounts now, and that's and for me, for my clients specifically, I'm still in the wait and see camp.
Mark, really appreciate your time. Mark Gardner there from Macquarie Capital.
Cheers. See you, Mark. Thank you. Let's just get you across what we're expecting overnight in terms of economic data, at least from the overseas markets. And yeah, look no further than the UK. We do get data on the housing market there. That's in the form of mortgage lending. The downtrend is expected to still persist. There's a very broad-based housing correction going on in the UK, as you know. We also get a bit of data on the housing front from the US as well. Pending home sales, again, expecting a bit of a pause or a bit of a pullback in February, but there are sort of those thinking that perhaps the market in the US in particular has passed its low point. We also get to hear from the Federal Reserve Bank Governor Michael Barr. Now, it follows testimony to Senate earlier this week with an appearance before the House Financial Services panel. So look, nothing to really shoot the lights out, but in the wake of our inflation read here locally, Kyle, the big one that we're still waiting for, and it's a big one, is the PCE deflator in the United States. That comes through, I think it's tomorrow night. Yep.
Yeah, absolutely. And well, I suppose that whole notion of a pause for the Fed is on the table there as well. That markets are kind of split around 50-50, at least when I last checked this morning, on whether it goes again next month. Pushing back on cuts, as we know last week, but that kind of question of a pause is as relevant for the Fed as it will be for the RBA when it meets Tuesday afternoon next week. Okay,
tomorrow, look, nothing here big locally, but we do get a couple of data points in New Zealand, as you can well see there. But we love stocks, don't we, Kyle? And we haven't really gone through those market leaders and laggards in a lot of detail. So why don't we do that now? And look at this. Still seeing gold miners resonate there. Gold Road, Evolution Mining, De Grey Mining, Perseus Mining, and Helios. But I've got sort of others on my list that we should talk about as well. Bravura Solutions, interestingly, is up by 9%. It recently had to undertake a rescue raise. So interesting to see that. I can't see any news associated with Bravura. ALS, we mentioned it earlier. ALQ is the ticker code, up by 5.8% after upgrading its guidance going forward. Reliance Worldwide, not only did it have its investor day, but we had Macquarie weighing in on it. It says that it looks attractive despite some of those macro headwinds and lifted its price target 4.8% to $4.40 per share. So those are some of the other big performers. But yes, it was a strong day when it comes to the miners and the gold miners as well here locally.
Yeah, Deterra royalties as well at the top of the charts. They're up 5.5%. Couldn't find on any particular news. I'll keep an eye out for that. But in terms of some of those other names, we did speak before. Reliance Worldwide, ALS Limited, some of those names as being at the top of the list.
Laggards, though, we mentioned Megaport, so we did have some appointments made in terms of management yesterday. But today, what's really draining is just the recognition that it's seeing outflows, and it doesn't matter if you're, I suppose, a fund manager or if some of your biggest shareholders is selling. It can be a flag, a red flag for others. Look, Core Lithium giving back 5%, but I don't think we should take too much away from it because it was one of those lithium names that gained exponentially in the wake of all of the goings on around Lionstown Resources, which we, not yet resolved. Obviously, it knocked back Albemarle. We did hear that Citi is reckoning it could get an improved offer, really is needed to get it back to the table, but also that there could be some competing offers. So that's still very much a story that we're keeping our eyes on here.
Without a doubt. It's actually one of those days you can say profit taking, and it's a true answer to one of those questions, what's going on in the market. That's definitely the case when it comes to those lithium names. An extraordinary rally yesterday, quite naturally, some people taking risk off the table there. I just wanted to also point out Whitehaven Coal, as we looked at before, down 3.7%, and highlight a conversation I actually had with Robert Gregory from Glenmore Asset Management today, obviously on the buy side there, talking about how he likes New Hope coal, Hope in particular, but also that he remains really bullish on the coal space. So if you are interested in coal, maybe go back and have a listen to that too.
So, all right, let's just quickly look at some of these small to mid-cap companies that did rate today. And you can see a pretty motley crew there, but really big gains, as you often see in that smaller end of the market. Flipping the page, though, and some of the big laggards in that smaller deal. Jervois Global, I hadn't really heard of it before today, down by 42%. I think that it did have to, I can't remember the detail, but it had to do something in relation to one of its projects, which I know is not very helpful to shareholders there, but you do want to look it up if you've got it in your portfolio. Okay, so Kyle, look, it was a day really dominated by that inflation read here locally, and the conversation continues to really center on the outlook for interest rates. Like, if I had $1 for every time I've said that over the past, 6 months, 10 months?
Well, 12 months now, I think. Their
a long
hiking
time.
cycle started in May, so it's been a whole year of this, and finally it may come to something of an end next week, but
look,
obviously we'll cover that off when it gets there.
Yeah, look, I forgot to mention that in your show notes or on the website, you can check out some of our good interviews from today. Justin Tyler from Daintree Capital on really what's up and what's good in fixed income. I think it's called A Compelling Case for Fixed Income. And I had a chat with Ron Shamgar from Tamim Asset Management about 3 small caps that he thinks has some pretty strong tailwinds behind it. So you can catch up with everything you may have missed today, either online, via the newsletter, via this podcast, via the show notes. I mean, really, why would you go anywhere else?
I wouldn't. ASX 200 finishes 0.23% higher for the day. We'll see you tomorrow morning. Have a great night.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.